Prashant Kumar joins us now, Managing Director and CEO with Yes Bank. Let's connect with him to understand how things are progressing for Yes Bank, at least for this quarter. Mr. Kumar, good morning. Thank you for joining us. Walk us through the net interest income. It's up 7% sequentially. Loans are up 4% quarter on quarter. What is causing the sharp jump in yields? And thereby the NIMS is the nature of the loans?
It is more in terms of the cost of funding. Okay, so like if you see our average cost of deposit, or I would be saying average balances in our deposits have gone up by 16% as compared to end of a period of 10.2. But if you see our average saving account balances and the current account balances, they have gone much sharp. Average current account balances have gone up by 30% and average CASA deposit has gone up by 26%. So basically, we are able to have a better control on the cost of funding. And at the same time, we are also working in terms of improving the yield on our loan book.
Right. Also, your cost of deposits has risen 30 basis points on a sequential basis. As it expands further, would you say that your NIMs are also going to peak? And where do you think they'll settle down for FY24?
So basically, NIMs are not, say, peaking out. This is a journey. We would see a continuous improvement on our NIMs. I would not give a specific guidance, but depending on how the interest rate scenario would move, I think we would see a continuous improvement on our NIM side.
So given that you're continuing to push on the OPEX, how are you expecting the operating profit to evolve in FY24? When do you expect to start enjoying leverage on the investments that you're making?
So already we are seeing the advantage of those investments which have been made earlier. This is more in terms of the efficiencies. And that's why we have been able to protect our PPOP to assets, despite going very aggressively on the retail side. Going forward, what we are going to see, not only net interest income would continue to improve because of a better yield on the loan side and a control on the cost of our funding, but we would also be seeing a very, very good growth on the non-interest income of a 30% upward. At the same time, the OPEX, we would try to keep that under control. But I think if you see our normalized operating profit, even for this year, it has actually gone by almost more than 20%. So I think we would be seeing a similar trend going forward also.
Gross slippages continue to remain elevated and net slippages are also at 1.5%. What is having impact on this, and do you expect some improvement going ahead?
Our slippages both for the quarter sequentially and also YoY has come down almost 25%. This year, if we see the slippage is in the range of say 2.5%. I think going forward, we would be able to control the slippages, say between 1 or 1.5%, not more than that. Because we are seeing, like, if we see continuously our SMA2 number, which is 61 to 90 days, they are improving. And this particular quarter, there has been a slippage of almost 250 crore on account of 3 accounts, where it's only a technical slippage, because they were part of the COVID OTR. And as per the Kamath Committee guidelines, even if a unit is able to service the interest and the repayments, but if they don't meet some of the financial ratios, as on 31st March 22 or 30th September 22, they have to be downgraded to NPS. So I think 250 crores on account of these 3 technical slippage, and also because of the out of order has been implemented in the bank. So some slippage has come from this. But I think going forward, we would be able to contain the slippage between 1 to 1.5%.
So, what is your approach against the Bombay High Court now, especially given the order on the AT-1 bonds? And could you share with us the timing regards to the situation? What about PE funds, Advent and Carlyle, that are investing in you? Are they concerned right now?
No, I think this is one matter which was there in the public domain. Everybody is aware about this. Uh, uh, we have already approached Honorable Supreme Court, where Supreme Court has given us the stay against the implementation of the Honorable Bombay High Court judgment. And when the hearings are going to happen, the decision would be there. But we believe like all the write-downs were done in accordance with the regulation and the Basel III regulation. But at this point of time, as the matter is pending in Honorable Supreme Court, we would not like to add anything on this.
Appreciate your time. Thank you so much for joining in and giving us a flavor as to how things are shaping up. That's the management saying that as of now, they're working on improving yields. The lower cost of funding is aiding their margins, and they will be able to control slippages between 1 to 1.5%.